Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 6:20 in New York on Monday, 19th day of May 2025, and this is the evening report for gold and silver. Gold prices experienced moderate gains today of $26.90. That is a total price gain of 0.84%, taking the most active June contract to $3,232.20. The overwhelming majority of today's gains in gold are not the result of market participants bidding the precious metal higher, although there was some support from that. It was dollar weakness. The dollar lost 0.61%, taking the index to 100.22. When we compare that to the rise in gold, which was a net gain of $26.90 or 0.84%, you can see that the majority of today's gains were the direct result of dollar weakness. Currently, gold is trading overseas in Australia, down $3.50, taking the most active June contract to $3,228.70. Currently, we see major technical support right around $3,180. As we detailed in today's opening letter, it is based on a couple of components. First, when we look at the recent ascent of gold prices up to the all-time record high, which was above $3,500 on the 22nd day of April, it began with an extended rally that took gold from approximately $2,600 up to a top on Wednesday, the 2nd day of April, of right around $3,180. Then gold would fall for 3 consecutive days, create what's called a doji candle right at the 50-day simple moving average, and then begin to rally to the all-time record high. From there, gold would retrace down to a low of about $3,210, rally back up to a high of $3,447, and then fall to a price point where the real bodies maintained a level of $3,180. The combination of this closing price, this opening price, the simple 50-day moving average, and the top that came in at the beginning of April is how we are pegging current technical support. Lastly, when we look at this rally from $2,976 up to $3,509 and the correction that followed, the real bodies, meaning the closing price that came in on the 14th, opening price on the 15th, occurred above the 50-day moving average and occurred above the 61.8% Fibonacci retracement from the entire leg of the last rally. This is why we believe that $3,180 is a critical technical level of support that needs to hold. Lastly, when we look at the stochastic oscillator, it is currently sitting both the percent D and percent K below 25 at around 2393, and it does appear that the lower blue line is going to cross above the orange line, the percent K and the percent D, which would also indicate that gold prices would move off of these recent lows and support level to higher ground. The levels of resistance above that would be $3,362 and $3,440, which is where we would expect gold to rally up to should this level of technical support hold. Of course, if gold trades back to this level and challenges first the 50-day moving average, which is now above 3,180 at approximately 3,196, and breaks below this and 3,180, there really isn't any major technical support until approximately $3,000 per ounce, with minor support at $3,046. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.